So, over the years, before GVFX, I was running various other trading line businesses, be it a broker or an academy or running a fund. And those of you who've done previous courses with me already know a lot of my history. Now, historically, when I had traders under my wing, we had lots of personal time with these traders. You know, everything has gone online nowadays, even learning, everything's online. Historically, I had physical premises where I would meet my traders. And a very important ingredient that they were able to receive from me while they were learning how to trade was that personal one-to-one psychological aspect, building the mindset. And as much as I have done as much as possible on my channel with the level 1 and 2 members to get them to that finishing line of becoming as independent as possible, you will always see some members struggle to cross the line, or just when they find that they are doing really, really well, they have a bad run. And when they measure their performance over a few years, they notice that there's lots of inconsistencies. And they don't give up because they also remember that they've had a good year before, or they've had a good 6 months before. And they always have that hope that 6 months they had good before can happen again and can happen longer. So that's why they don't give up. But what happens in time is once you pass through those years, and some people carry on, and they still find themselves in that black hole after having a winning streak. And it can break someone. Slowly, it breaks them to the point where they may never come back to trading again. Or I've seen it break someone that they don't come back to trading for a couple of years. And then finally, when they come back, what happens is they're so anxious and nervous that they don't want to experience what they experienced before. Their guards are up. Psychology is very, very strong. And certain things that they did before that they couldn't control, they're able to control this time around. And the penny drops and they start becoming a consistent trader. But not everyone's that lucky where they decide to come back after they've given up. Because on the flip side, I've seen many traders that when they've given up, they've never come back again. In fact, they've been so disgusted by it that they don't ever want to think about trading. They don't even want to, they've deleted the app, they don't want to see a candle. They have nightmares if they see a candle. I can relate because I was the second person, meaning I was the person who gave up and then come back. And when I come back, I dare not do those things that I know what caused a lot of my downfall in trading. You know, I'm sorry to say I wasn't the number one. The number one person, the good traders, the ones that have the gift from day one, they're the ones that don't even have to give up to come back. Their discipline is intact from day one. I don't fall in that category. I fall in the number 2 category, where I had to break and completely break down and give up and then recollect and come back. And some people learn like that. Some people have to feel the pain to then know that they never want to feel that pain again. So those boundaries never get crossed. And some people, and you know, there's a lot of psychological studies about this. And, you know, I hate to say it, but how you are raised, the type of family environment you grow up in, the dynamic that your mum and dad have, all of those things have impact in building that structure of your mind. That trading is such a skill and such an industry that it messes with every aspect of your brain. And the reason why it messes with every aspect of your brain is because it's developed, this environment is developed by some of the greatest think tanks in the world. Now, if this whole industry, $1 trillion industry,
Oui, maman? Allô? Ouais, ouais, ça va. Non, non, on a eu trois gouttes de neige. J'ai balayé la terrasse pour pas qu'on glisse, parce qu'après ça se transforme en glace. Ouais, ouais, carrément. D'accord, ok. Donc 1000 balles chacun, c'est ça? Ok, bon bah très bien. Ok. Non mais je vais avoir une facture qui va arriver pour les travaux que j'ai fait à Paris. Donc c'est toi qui la paieras, j'aurais demandé, ça ne dérange pas. Donc je te filerai le RIB et puis tu paieras la facture à ma place. Ok? Bon, bah écoute, je vais retourner bosser alors, parce que je suis en train de travailler. Allez, je t'embrasse ma mounette. Ciao, ciao.
Is designed by some of the greatest think tanks in the world. Their prime focus are the consumers, us end users, who bring that liquidity into the market. So obviously they've tapped into all the different psychological aspects of human mindset. So some people's family environment, how they're raised, how they see the parents deal with problems, develop a character that they fall into the number one category, where that discipline is instilled from day one. The not messing around is instilled from day one. And I always call it the Shaolin style discipline. They don't know anything otherwise. I grew up at a time where, there was no mobile phones. If I went out to play with my friends, my parents couldn't call me to say, come back. We'd just work out when we want to come back, and, I had a lot of freedom to experience my growing up. And in that environment is good because it builds a lot of resilience, but we also fall and get hurt. So that's why I fall on number two, where I have to fall and get hurt to learn and build. And then the last one is the final one, where I'm sorry to say that somebody who's in a mindset where they have addiction problems, they have gambling problems, they have all sorts of emotional stuff that impacts their life. When they want to become traders, all of those things are going to pass on to them. It's going to go onto the live account. No matter how much they try, it's going to go onto the live account. So my honest advice for them would be either they should look at a completely different industry and not trade, or they need to get therapy at the same time. And there's absolutely nothing wrong with therapy. If you look at some of the greatest hedge funds in the world, they have in-house therapists, because those people who fall on number three, who are messed up in the head, I'm going to use messed up in the head, do you actually know they have an ingredient that allows them to be one of the best traders? So even though number one and number two, where I fall in, we come back and we become consistent, the number three, who may always give up and never come back ever again, whose mind is messed up, they actually possess an ingredient that allows them to be one of the best traders. And therefore, they are stuck. And these greatest think tanks in the world, they know this. They know the ones that will give up are the ones that have the ingredient to screw the market over. But the only way they're going to do that is if they correct the area that most likely these think tanks know 9 out of 10 of us wouldn't correct it. We don't want to go therapy. We think, going therapy means we're a bit crazy, etc., etc. So, and even number one and two who don't need therapy, even if they get therapy, that will even enhance their trading. And when I say therapy, it can be any kind of therapy in terms of discussing those emotions, the mindset, the barriers, your addictive personality. When you tell yourself you're going to walk away and you don't walk away. Talking to someone about this regularly as a trader is a massive help. It's an absolute massive help. And I didn't even mention this to my level 1 and 2 members. I went through a journey where I got that support to build my mindset, where I regularly spoke to somebody. And it was a massive, they unlock parts of you that you did not know that existed. and they link it to part of your childhood that you did not even know triggered that structure in your mind. So there is hope for 1, 2, and 3. And those who sit on 3, that ingredient that I'm talking about, the winning ingredient, let me tell you what that winning ingredient is. That winning ingredient is the one that doesn't hesitate to pull the trigger, whether it's to put a trade in or whether it's to take an sell. 1 and 2, as in the really disciplined people, and me, who falls and learns and never does it again, we still hesitate when we pull a trigger, because number 1, the person number 1 who has strong discipline, he hesitates because his discipline is such that he doesn't want to get it wrong. And me falling into number 2, who gets hurt and learns, I hesitate to pull the trigger because I'm also nervous that I don't want to feel that pain that I felt before. But number 3, the one that's a bit crazy in the mind, who gambles, addictive personality, he's ready to pull that trigger, whether it's to take a loss or whether it's to put that trade in, he or she. Okay? Now, that is a very dangerous combination for the market, because if that person gets it wrong, he wipes out those brokers. He makes a lot of money. He hurts the market. So these think tanks, they know that 9 out of 10 of those number 3 is always going to lose more than he makes. So that's why they can afford to take that pain. The market can take that pain because they know that the one that does hurt the market, they will make it back from the 9 that won't. So that ingredient of pulling the trigger, not pulling the trigger, if he now gets therapy, or he or she now gets therapy, and controls that addictive personality, and he picks and chooses when to pull that trigger, then he will be he or she will be a lethal trader. So, all of you guys here in this group fall in 1, 2, and 3. So the universal advice that I would give you that will help all 1, 2, and 3 is make a plan every day, not a weekly plan, a daily plan. Because when you make plans in life, a 5-year plan, a 10-year plan, let's be realistic. You may accidentally go and achieve it. You look at yourself 5 years down the line and you're going to be like, oh, wow, I said I wanted to be an engineer and I became an engineer. Amazing. But that's just chance. The real way to execute and achieve a plan is you have to micromanage yourself. You have to break it down. It's like in businesses, when managers want to get results from a team that is not delivering, they need to micromanage them. As much as the team don't like being micromanaged because they feel their freedom is being infringed on, but it's a fact. You micromanage your team, that team is going to achieve, because no one's going to be able to hide. Everyone's going to have to be accountable. So if you now micromanage yourself, you cannot hide from yourself and you have to be accountable. And the way you have to do that is you have to make a daily plan, not a weekly plan, a daily plan. And one of the crucial things in that daily plan you're going to have is how many setups you are going to take. You may decide, I'm going to take 1 setup. And once you get that setup and you take it, you have to close that laptop, close that phone, and don't look at the chart. And some say, oh, I still want to look at the chart just to see what's going on. I want to stay in touch with the chart so I'm ready for tomorrow. No, you can be ready for tomorrow when the market opens and you open the chart tomorrow. You don't need to look at the chart, because if you're going to dance with the devil and play with temptation, it's only a matter of time you're going to give in. So if you've accepted that you're going to take 1 setup, and now after you've done the setup, you're still looking at the phone, still watching what's going on, naturally, if it presents another opportunity, you're going to take it. And then you give you a chance to get hurt. And then what have you done? You've broken your plan. But if you've now told yourself, actually, I'm going to be free today, meaning I'm not going to be running around in between doing other stuff and then worrying I've got a trade hanging. I'm going to be home or in my office all day. I'm going to take 3 to 4 setups. Then by all means, take the 3 to 4 setups. But when you say you're going to take one setup, it's because you know I've got school runs to do. I've got to get to the office. I've got to come back, get food ready for my kids. I've got to do this. So you know you've got all of these things going on. And that's why you've decided you're going to take one setup. So you take that one setup. And once you've taken that one setup, you're happy, psychology is strong, you're great. And then what happens? In the middle of while you're doing something else, you might have got a little break and you had a check on your phone and you're like, oh, brilliant, another opportunity. You go in and that opportunity now gets stuck for about an hour. And then in that hour, you're like, oh shit, I've got my kids to pick up, or I've got dinner to make. And now suddenly you've gone busy because you need to do what you had planned to do with a trade running. Now, when you're busy doing stuff and now you're also trying to watch your trade and massage your trade to manage the situation, you're either going to get dinner wrong or you're going to pick up the kids late, which is directly going to impact that trade that's open. So something's going to give and it's still going to impact your trading. And those kind of things create bitter feelings, anxiety, and all of those nasty feelings that you carry over the following day. Now, following day, when you've made a new plan to, oops, somebody's dropped out, I think accidentally. Following day, when you've made a new plan, sorry, I think someone's dropped out. Yes, following day, when you've made a new plan, you're going to struggle to execute that plan because you're already carrying baggage from the previous day with a downer. And the thing is, guys, you may not think this is serious, but this is so serious because the reason why you keep falling into the trap of why am I not consistent? Why is it that every time I make money, then I'm also losing money? Why? And then what do? You look for new techniques. You look for new strategies. You look for new signals. It is utter bullshit. I'm telling you. You do not need to look for new strategy. This is the us human mentality, and the market makers know this. The people who create this industry also know this. They know that as humans, we always look for a solution elsewhere. When the problem lies with us, we don't admit it. We look for it elsewhere. And even if we know it still lies with us, even if we know it's our problem, we look for a solution externally. It's easier. So you're always looking, oh, let me see if there's something else that will make it easy, something else. And then the worst case, what happens? They give their money to somebody else to manage, to fund manage. So the problem is actually within. And that problem is make a plan every day. Stick to the plan. If you don't stick to the plan, you should be ashamed of yourself. You should be ashamed of yourself that this is your business that you're taking down the drain. This is not just a fun arcade game. When you become a trader, you are running your own business. That's a fact. You are your own boss. You are running your own business. And if you don't follow your plan, then you should be ashamed. It's like a shopkeeper who has a shop and he's lazy and he doesn't want to open it. And then he opens it at 3 o'clock in the afternoon when it was supposed to be 9 a.m., lost all his customers who are thinking, what is this guy? Doesn't open consistently. You're not going to run a shop like that. You would be an absolute numpty to run a shop like that. That's exactly what you're doing in trading when you mix and match and don't stick to a plan. One day do this, one day do that. It just doesn't make sense. Every single one of you guys, the fact that you wanted to do this course, and this was a great tester for me. The fact that you wanted to do this course, I know you have that problem where you're not consistent. I'm happy that, yes, you make 6 months worth of money, but then another 3 months you're losing money. You're not consistent. And I don't have time. And like I said to you before, I had the opportunity to have my traders with me on a trading floor. Every 5 minutes, somebody's in my office and I'm able to give them that psychological boost. I don't have that time to do that physically with you guys. So I thought, if I'm able to do this delivery for you guys, combine it with range management, reassert the psychological aspect of your trading and where you are going wrong, then you're going to cross a big barrier in your trading. And one of the things that you are going to do is every single one of you guys here, if you are committed to making this work for yourself as a trader, I need a plan from you guys. You are going to send me a plan, and I'm going to hold you accountable for it. And I'll tell you how I'm going to hold you accountable. Some of you guys here I know personally, yeah, and I love the fact that some of you guys here I'm quite heavy on. When I say heavy, because some of you guys are level 1 and 2 members, sometimes I'm quite hard on you, and I love the fact that you still don't disrespect me. You still ask me questions politely, and I love that about you. And what I want to say is, I'm going to start holding you accountable now. And the way I'm going to hold you accountable is now you're going to give me a trading plan, your trading plan, Monday to Friday. Monday, how many trades you plan to take, what you plan to do, and what your external life is that day. Are you working from home, working from office? Do you have kids to look after? What your timetable is? And then you're going to say when you're going to trade and what you're going to trade. Now, when it comes to Sunday, and when you message me and you say to me, oh, Mr. Gold, I took this position here and it reversed like this, but I can't understand why this didn't happen and that didn't happen. And I'm going to be like, okay, what day is it? And you said Tuesday. Tuesday, you said you're only going to take one trade before New York, because after New York, you said you're going to be busy working. So why is it that you took a trade in there? That's it. That's the problem. I'm going to hold you accountable to your plan. You are going to create a trading plan for me, and you are going to tell me exactly how you plan to trade. Because if you have days in your week that you're busy, I don't care if 10 Mr. Gold is posting a signal, don't take it. Take that day off. There is absolutely nothing wrong with taking a day off. And I'm going to show you something on the range. One good day is better than 5 willy-nilly days. And the reason why this course is important is I can then tell you guys, the only reason I post the signal every day is for the purpose of running the channel. Because the channel has 700 members who have come with all different types of expectation. If I don't give them one signal a day, they're going to be like, oh, this channel is dead, I'm leaving. So to run the channel, we have to do that. But those of you guys who have been with me long enough, and this is why this type of communication is so important, I need to be able to tell you this, that sometimes ignore the channel. The channel is, yes, I have to put a signal in every day, but take what works for you and only that. Some of you guys can see a reversal happening and know that it's going to happen, but you only go in because Mr. Gold has posted a signal. But I don't want you to do that anymore. I want you to think, I'm busy that day, so I'm not going to get into that entanglement that day. I'm going to take that day off. And tomorrow I'm going to catch it right up from the bottom. This is your choice. You can do that. You do not have to trade every single day. And one of the best times of my life as a trader, in my journey as a trader, I've always been entangled with a broker, whether I was running a broker with it, whether I was running a hedge fund with it, whether I was running some traders with it, whether I was running an academy with it. I was always entangled with a business dynamic. So therefore, I had to do things, meaning I had to overtrade. I had to put more positions out. I had to do all of those extra things. But my best, consistent, and highest earning trading was achieved when I was not entangled with anybody, and it was just me as a trader trading alone. Meaning I did not have to post or take a signal every day. I had that freedom of enjoying my life. And in that time, I only needed to do 2 setups a week. Can you imagine? Only 2 setups a week, but I was earning great money from those 2 setups a week because I'd trail them from reversals. And we'll look at this today. So, first thing I want you guys to do is you are going to make a trading plan from Monday all the way to the weekend. On the weekend, you're going to keep yourself minimum 1 hour. And this is a bare minimum request. Ideally, you need at least 2 to 3 hours. And when I was learning, took 2 to 3 hours. But minimum, I need 1 hour of your time every weekend where you are going to backtest. And I'm going to tell you what to backtest. Because that backtest that you do has a direct impact on your psychology. And that impact that it has on your psychology and mindset will have a direct impact on your trading. Back testing is critical to build psychology because everyone asks, okay, Mr. Gold, you give me all this advice, great. But how is this advice gonna ignite in my head? How will I activate this advice you've given me? Because it's easier said done. You always, people say, oh, don't touch the fire, but it's easier said than done. When it's there, I want to touch it. People, parents say, oh, don't go clubbing. But when I'm at uni, I still want to go clubbing because I just joined uni and everyone's doing it. Everything the parents told us not to do, we want to do. So, Mr. Gold, you're telling us, yeah, all good. You're telling us, don't do this and don't do that. It affects your trading. But we still end up doing it, Mr. Gold. So how do we fix that? And the way you fix that in trading is by back testing. And I'm going to show you this on the range management, and I'm going to do the back testing with you. I'm going to show you 2 critical elements of back testing that you're going to do that's going to give you some psychological strength when you're in a trade. Bear with me, someone's logged out and logged in. Hold on. Okay, somebody's logging in and out. You guys have to be prepped with a good internet connection because you're going to miss out, and I can't keep adding and joining people in and out of this. So the back testing element that I'm going to show you, 3 critical points. They're going to help your psychology when you're stuck in a trade, just because you back tested it. Because right now, the only bit of confidence you have is when Mr. Gold tells you, it's okay to milk, it's okay to chase. It gives you a bit of confidence, but it's never going to give you 110% confidence because who the hell is Mr. Gold? He's just somebody we pay and he sends us signals and he gives us advice on his channel. So if you want that real confidence, it has to come from yourself. And I'm going to tell you and show you what to look at on the chart to give you that confidence. Okay? Number 1. Number 2, the trading plan. What does your trading plan entail? Your trading plan is going to entail Monday. Is Monday, and the reason why it has to be every day, because every week it may change, because following week you might be on holiday. So therefore, your Monday might be better to trade. So therefore, it has to be a daily plan. So when you create your daily plan, you will write down in the beginning of your trading day, whether it's at 11 o'clock the night before when the market opens or in the morning, you're going to put, okay, Monday, I have school runs, I have work during this time, I have a slot between this time, I'm not that busy, I can manage a trade, I'm going to trade, but I'm going to take 1 setup. Tuesday, Wednesday, slow days from external stuff. I'm going to, oops, somebody's coming in and out. Yeah, so Tuesday and Wednesday, somebody's got more time. They're like, okay, I'm going to look for a couple of setups, not just one. I'm going to look to go and trade all day. So therefore, I'll have these 2 will be my trading day. Thursday, I've got a busy day. Yes, I'm going to have some time in the morning, but later, I'm not going to have a chance to even look at the phone. That's a day not to trade, because if that trade reverses, other people are going to manage out of it, but you're not going to be able to manage out of it because you can't service the trade because the afternoon you haven't got access to your phone properly. So what do? That trade, no trading day. Whether that trading day was going to be a trading day full of rainbows, I don't give a shit. Cross that day out, no trading day. Then Friday, again, if you can take 1 setup, write it down, and that's your plan for the week. Saturday, back testing. 1 to 2 hours of back testing. Sunday, just preparation. Draw your lines, get ready for the week, and that's it. And you can draw your daily plan. I want that plan from you. If you're serious, if you want to be where I have become after so many years, if you want to be that trader, and if you want to take this seriously, send me that plan. Because if you don't send me that plan, I can't hold you accountable. Because then I just have to have a go at you anyway. You tell me something and I'm like, okay, why haven't you done this? Why haven't you done? I just have to have a go, which is a bit pointless. But if you have a plan, then I can hold you accountable and then you can see yourself, shit, I'm not even supposed to be trading on that day. And when you know that I'm going to hold you to account, you ain't going to do it the following week. So a trading plan of your daily routine has to be done. If not for me, as a minimum, you need to have a trading plan because somebody needs to hold you to account. One other thing that you can do, and I don't advise this for everyone because not everybody has a good relationship of, okay, I won't say good relationship, but not everybody has that kind of relationship with their partners. Some people share everything about their work and life with their partners, which is great. And some people don't because they don't want to mix work, etc., with their partners because it can create strain in the relationship. And you know what? All due respect to both types of couples, I don't have anything against that. Me personally, and I will share what works for me, I feel that the whole reason partners are created in life is for us to complete ourselves. And if you cannot share your problems and things that you're facing with your partner, then for me, I think that's you're missing out. You're missing out because your partner is going to be the one who's going to relieve that stress from you, and vice versa. You will relieve that stress from them. So sometimes I feel one of the greatest people to hold you to account is your partner. So when your partner knows you have a habit and you're going in over and over again, and then you tell them, "Oh shit, I've blown another account, babe. I've just like, why did you blow it? I went in and then I went in again and then I didn't take a stop loss and I just thought there was a good support and I thought, you know what, I can make this up all in one go and I went in really hard and I done it." So she's like, "Oh babe, but we could have done with this money, but you know what, don't worry, do what you need to do. And you know, tomorrow's another day, we load up an account and you do it, you know." And then what happens is, and that partner, instead of having a go at you, because they felt sad for you, sorry for their loss, and they're giving you still that "don't worry." Now what happens is you feel so shit that you don't want to let your partner down next time. So next time you're going to be like, first and foremost, you can't blow it and not tell her because she's going to know now because you share everything with her. She'll look at your face and she'll know, or he, for me, it's she. So you can't lie to her. You're going to have to tell her if you blow it. And you're going to feel shit because she's so supportive and you're letting her down. So your partner's the greatest person who can hold you to account. But if you're that partner or your partner's going to have a go at you, then obviously naturally you're going to be hiding and lying and etc., etc. And you have a bigger problem than trading, my friend. You need to work on your relationship. Okay. So some partners will always be fiery. So what you want to do as a trader, you want to sit down with them and you're going to have a meeting with them and you're going to tell them that when I get things wrong, I go out and don't come or be late or forget to put the trash out, etc., and you have a go at me. Do it, babe. I don't mind. I need it. I'm a fool sometimes. But in trading, when I fuck up, please don't have a go at me. Support me. That way I'll never lie to you and I can show you and then you can hold me to account and then I can correct myself. If you lie to me, I'm going to, if you tell me off or have a go at me or then I'm going to be hiding this stuff from you and then no one's going to hold me to account and I'm just going to gamble. So as a trader, if you have a partner or someone that you live with, share the journey with them, tell them that this is what you're doing, and where you lack, share that with them. And then they can hold you to account. And then what happens is you yourself, when you're about to do something wrong, you're going to feel shit because you're going to be like, shit, tomorrow I'm going to have to show or tell my partner what I've just done. And I've done it twice already, blown accounts, and she's still stuck by me. I don't want to let her down. So that helps. And look, this is all real experience, guys. This is real experience. If I didn't have my partner, then I wouldn't have fixed some of my problems that early. It would have escalated even further. Okay? So share the journey with your partner so they can hold you to account. If you don't have a partner, share the journey with me so we can hold you to account. You will feel shit letting us down and your partner down, and therefore you'll be forced to correct some of those things. Okay. Number 2, trading plan. Have a daily trading plan to fix those niggles of when to trade and not to trade, and follow that plan. Find out where you fall on that 1, 2, or 3. Do you already have a Shaolin discipline where you don't need to worry about your psychology? In that case, we're going to cover the range management, and that will finish off your session for you. Do you fall on number 2 like me, where we have to feel the pain and hurt and then learn? Or do you fall on number 3, where you're just a crazy person, which is nothing wrong with that? 2 and 3, think about getting some therapy. There's absolutely nothing wrong with it. The sessions aren't that expensive. You're spending hundreds of pounds on loading up new accounts, buying more challenges, trading so much money. Thousands of pounds you're investing in your trading, but you don't want to spend a penny on your psychology, which is the strongest part of trading. Spend a couple of £100. Take a session a month. If you can't afford a session a week, take a session a month. Take one a quarter. Reset your mind. You'll feel great. Take it from someone who's done it, and I've seen the help it's made. So 2 and 3, get some therapy. Okay. And now I'm going to move on to showing you how we can connect some of these dots of psychology onto the chart. Okay. So everyone can see my chart here. Now, one of the biggest problems we have with our psychology is when we get mixed messages. And this is not in just trading, we have it in life. When you have a relationship with your partner, or when you're in an abusive relationship, or when you're in a friendship that somebody takes advantage of you, and they take advantage of you for many years until somebody tells you, look, they're taking the piss, you need to cut them short. All of those things happen in life. Why? Because we get mixed messages. When you get mixed messages, it's very difficult to focus because you don't know what you're focusing on. And then it's disheartening because you're getting mixed messages and you're focusing on that. And then you're like, actually, no, you're not meant to do that. You're meant to do that. And then you do that. And then you're, oh shit, I'm not meant to do that. Mixed messages in life really affect us. Same with trading. When the chart is giving you mixed messages, it's going to eventually catch up. You might be one of those people who want to sit in an abusive relationship for 20 years and then realize, shit, I need a divorce. Or you're going to be that person within the first 3 months. Your parents built you up in a way, or within the first 3 months, you know, shit, this person's taking the piss. They can get out of my life. Same with trading. If you're going to be getting mixed messages, you either call it and you say, no, I'm not fucking doing this anymore. Or be that bitch, and excuse my French, where you're going to keep getting shagged by the markets day and night because you can't accept the fact that you're ready to take that mixed messages. And you know which mixed messages I'm talking about? Buying and selling together, hedging. It does not work. It's a fact. You are telling your mind 2 different things. You're telling your mind, go up, go down, go up, go down, go up, go down. How the fuck are you going to make any money? I'm sorry, but this is facts. I'm going to have to use that kind of language because I'm feeling it. You're not going to make any money. You'll make it one day, following day is gone. You cannot buy and sell, buy and sell, buy and sell, buy and sell. It does not work. Stick to one direction. Whether it's only sells, fine. Or whether it's only buys. But with gold, it's not a currency where you can do either all sells. Because what happens is, if you're trading currencies or other products, you still have to trade only one direction if you want to make money. If it's only buys, you only take buys. If it's only sells, you only take sells. Because if you get stuck in the sells, you can range manage the sells. If you get stuck in the buys, you can range manage the buys. But if you try and manage your buys with sells, not going to work. It's going to bleed you out eventually. Nobody survives that. Out of 99%, of 100%, 99.9% fail. Only that 1.1 very minute percent accidentally will come out. So if you're stuck in a buy, you cannot manage out with sells. And if you're stuck in a sell, you cannot manage out of with buys. The most successful results you'll get of stuck in a sell is by managing it with sells. Not 100%, but better than trying both ways. Same with buys. The most successful ways to get out of buys is by managing it with buys, not with sells. Again, not 100%, but far better than swinging both ways. And then you have gold. Gold, only one way. Take my word. And if you don't want to take my word, zoom out on the chart. Gold, only one way. Only trade buys. Look, guys, my chart goes as far as what? 2018 here on the MN chart. 2005. Hold on a sec. Zoom in. Am I on MN? Yep. Let me zoom out. 2005. Only gone up from there. Gold only goes up. Yes, it will go down, but only to eventually go up. Why do you think some of the greatest traders in the world only buy? They're only long. They don't short. The only great traders that will short are insiders for a very short space of time, and that's why it's called short. That's why it's called shorting, and longs for keeping it long term. So only a small amount will short because they've got inside information. They're going to take advantage of something, of someone, or some company for gold. But otherwise, if it's you and me sitting in that average platform, for us, the only way we win is buys. Only way we win is buys. Now, the question arises, so how do we handle when we are in buys, but we get stuck in those aggressive fucking move down? How do we survive them? This is what lets us down, Mr. Gold. Yes, we believe you. Buying is the only way. Yes, we believe you. But when we get stuck on those little sharp turn downs, how do we survive them? Because Mr. Gold, I just end up sticking a sell in because I want to hedge my account because I don't want it to reverse anymore. I can't cut the trade. I panic, so I don't know where to enter the layers. And then guess what, Mr. Gold? I'm like, what's that? It goes all the way back up, but I can't catch none of it because I didn't go in. Because I got so abused by the market, my heart and my head hurt so much that I couldn't go in and catch the ride up. And you know why you couldn't catch the ride up? You didn't have the mindset, you didn't have the psychology. And the reason why you didn't have the mindset and you didn't have the psychology, because you didn't believe it's going to go back up. And why didn't you believe it didn't go up? I'm not saying, oh, because I didn't listen to Mr. Gold. No, you don't have to listen to Mr. Gold. Who the fuck is Mr. Gold? He's just somebody we paid for running a channel. Forget Mr. Gold. I'm talking about yourself here. You didn't believe it's going to go up. Why? Because you did not backtest. You did not see how gold moves. We will look at it today. I'm saying you did not do that. So if you did not do that, of course you're not going to have the courage to get back in and fight that battle. This is what I do. If I now zoom out of this chart, I'm on the H1 chart. If I now just zoom out what my screen allows me to see, yeah? Simple, just what my screen allows me to see. This is what my screen allows me to see from September to December, which is a lot. We don't have to do that. We can just look at 1 month. But me, I'm going to go by me. I'm looking at what my screen allows me to see. September, October, November, 3 months, 1 quarter. This 1 quarter allows me to see all the highs and lows, all the manipulation, all the big crashes, all the big movements. Here I've seen a lovely bull run of 70,000 micro pips, which is 7,000 pip bull run. In that 7,000 bull run, I am seeing a correction of 40,000 micro pips, 4,000 pip movement down. Oh, wow, that's quite ironic. Half of that range got corrected. That's not ironic. This is a standard deviation. You need to understand this. Most of these breakouts, at least 80% of them will correct halfway. Would that happen with sales? 60% of the time. Because gold is always going up. Therefore, all the probabilities, whether it's signals, whether it's corrections, whether it's these movements and patterns, buys, bull has a higher probability, sells have a lower probability. So there's a higher chance when you're looking at bull trends for getting a 50% correction, a very high chance, 80%, 70, 80%. But when it comes to the opposite direction, correction, when it goes down and then to go up, the correction for selling, it may not give that. It may go and crash all of it and go further up. You understand? When it comes to the bull, we are not looking for half a correction. it'll go and match the entire move. On sells, so if this movement up, somebody now goes into a sell and they're thinking, oh, it's going to go all the way down, I'm going to get the full correction. No, you'll only get half of that correction. When you are doing the opposite direction, when market's gone down, and now you're thinking, oh, I'm only going to get half correction like buys. Yeah, 60% of the time, half correction. But otherwise, you'll get the full retest. You get the full retest. You get the full correction, a high percentage of it. So what do? I look at my entire screen, what my screen allows me to see, which is 1 quarter, 3 months. And now what I do, I look at the biggest crash. And here, the biggest crash I see is the movement here, 43,000, so 4,000 pips before it connects. Now, if I know the worst case situation, I'm going to see 4,000 pips retracement down. And now I want to give my psychology even more strong boost. I want to give my psychology a really strong boost. I'm going to go further back. And I'm going to see other big drops and measure them. Let's measure this big drop. Okay, 18,000, 1,800 pips, so not as big as the other one. Okay, 16,000 micro pips, so 1,600 pips, so still not big as the other one. And go a bit more, Okay, there's a big crash down here. What's going on here? Okay, 24,000, 2,400 drop. Okay, still not big as the other one. I'm checking. Okay, let's do this one here. 10,000 micropips, 1,000 micropips. And now this one, I'll drop both range because they're quite connected together. So I'll go all the way down. 15,000, 1,500 micropips. So guys, I'm now even going to go onto the daily chart and check big drops on the daily chart. Okay, so we have here to there, but I'm going to catch it, make it worst case, this drop here. Okay, 46,000 micropips, same as the one before, 4,000 pips. Let's see if there's any other big ones that I need to worry about here. Okay, nothing here. Weekly chart. Let me zoom in. Okay, let's see this big move here. Again, 4,000 pips. Okay, let's see this one here. 23,000, so 2,300 pips. Okay, let's do this one. This one looks big. Zoom out. Okay, looks very big. 80,000, so 8,000 pips. We had some good corrections in between, so I've caught it. Really, I should be catching it from here, but I'm just going to do worst case situation. 8,000 pips. And that's the worst, okay? So now, let's go back to the H1 chart. Now, if I know that once in my whole life of trading gold, the worst case situation was 8,000 pip reversal, okay? And current climate, the second worst I've seen is 4,000. But otherwise, the average worst case, the big crashes that we see every couple of weeks is 1,000 to 2,000 pips. Okay. So now think about this, guys. The average every week when we get trapped here and there on trades reversing, 1,000 to 2,000 pip is the maximum reversal. Very rarely, once a quarter, twice a year, we get that 4,000 pip reversal. And then that once in a blue moon, lifetime changing situation is that 8,000 pip reversal. Now, me as a professional trader who's already made lots of money, who has able to put aside money just to trade, if I want to guarantee guarantee, and nobody gives you guarantees, but if I want to guarantee myself that 110% I'm going to make money in trading, nobody can give you guarantees, right? I'm going to tell you right now, there is something that can give you a guarantee. And all the big players, and that's why they always say the rich will always get richer. Because we can guarantee to be successful in trading gold, 100%. And the way we do that is I make my risk management to handle 8,000 pips reversal, because that is the Armageddon, the one-off ever that will happen. If I know that my risk management can handle 8,000 and give me a bit of breather, then I know it's a matter of time that those trades are going to come into play and free me again. You understand? So right from the outset, the reason why I can trade every day from reversals and I'm not afraid to enter a layer, because my overall plan, risk management, appetite, I've already incorporated. Can my account handle an Armageddon? Can my account handle Judgment Day? Can my account handle that one-off eclipse of 8,000 pips? If it can do that, then no problemo. Every day, those 1,000, 2,000, 3,000 pip reversal, I'm going to watch it and I'm going to enjoy milking it, because I've given myself that guarantee. Now, that's my main account. Then I have my sub-accounts, which are smaller accounts. On those ones, I give myself a guarantee of 4,000 pips, the one that I just showed you, the one that can happen once a quarter. I need to survive that 4 times a year. That means 4 times a year, my trades may be stuck for about 2 weeks to 3 weeks until it frees me. Now those mid accounts, my sub accounts, they have the guarantee. Because they can handle 4,000 pip reversal, I know I'm never going to lose the account. The worst case situation will be I'll be stuck in drawdown and then it's going to free me. And then I have my day-to-day bread and butter account. The bread and butter account is going to be to handle 2,000 pip reversal. Can it handle a 2,000 pip reversal? Can my bread and butter account handle a 2,000 pip reversal? All of you guys, until you've made it and you have a large account, some of you guys here I know personally and you have large accounts, you can fall straight away on the 4,000 pip category. Most of you guys will fall in the 2,000 pip category. When I say 2,000 pip category, meaning your account size, you can handle a 2,000 pip reversal. So, rather than taking Mr. Gold's word for it, if you have seen that gold is only going up, if you have seen worst case, I need to handle a 4,000 pip reversal once a quarter, or regularly handle a 2,000 pip. Look, this movement is 2,000 pip. Regularly, I need to handle a 2,000 pip reversal. If you can now make a plan on every one of those trades that you take, that can I handle a 2,000 pip reversal without stress, you're going to free yourself. You're going to free yourself in a matter of time. And this is why some of you guys keep saying you're going to do it, but you can't do it because you're just listening to me. And listening to me alone is not going to give you your answer, because you can't get hold of me whenever you want. You can't get the reassurance from me whenever you want. I'm not going to tell you there and there, hold your trade open, it's going to free. Because I cannot do that, guys. I cannot say that to you legally. Otherwise, I would have told you, hold that fucking trade. Don't close it. Legally, I can't tell you that. This is a course. So I'm telling you, you can hold that trade when you're stuck in a buy, if you're able to hold that reversal. So as a minimum, you need to, on a day-to-day trading, because we regularly see that the regular battle that we have is the 2,000 pip reversal. And you need to be able to handle that 2,000 pip reversal. Now, how would you handle that 2,000 pip reversal? Now, let me tell you. Let me get my notes out. Bear with me. With me, okay. I don't usually need to write notes, but on this I do because I didn't want to forget anything in terms of. So, one of the biggest problems you have is when you enter a trade. So imagine we entered here. Let's do worst case situation. Imagine we entered a buy here, bang on here. And now it's fucking crashed down. Nasty, nasty crash down. Oops, somebody's cut off and come back in. Bear with me. Okay, somebody left and came back on. I'll just put them back in. Let me see if they come in. Brandon, I'm not sure how much you've missed, but you've just come back in again. Okay, so imagine I've put a trade in here. And now look at the crash down. Now, I've told you it's going to go up on the channel, matter of time. You yourself don't know how far it's going to go down, but you've measured our usual, most likely, biggest reversals is 2,000 pips, and you can see here, 2,000 pips. So you know I'm going to, worst case situation, from here onwards, it's going to go up. Now, from here, you've held on to a trade. And you're seeing it go down, 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 and it's come all the way down here. Here. And you're not taking advantage of any of these bounces. What areas can you use on bounces? Now, I'm going to go universal. Imagine you don't have level 1 and 2. You don't have level 1 and 2. If you have level 1 and 2, then you have many levels. But if you don't have level 1 and 2, and you only have the intradays that I share, and the moving averages. You have these moving averages and you have the intradays that I share. Now, the reason why you don't enter on those layers is because you've got one stuck and it's reversing your account. And number two, and I know I've already read your mind, or the other reason I don't enter the layers, Mr. Gold, because sometimes when I enter the layers, even they're fucking reversing. And I'm going to use these swear words because I mean it passionately. So, and I know this is in your head. First, Mr. Gold, I don't enter these layers on these moving averages or on the intradays because when it's crashing, it also crashes past that. And a few times I got stuck. Yes, Mr. Gold, on the intradays, I do get the bounce majority of the time. I do get the bounce on the moving averages majority of the time, and I'm happy I make money. But then the one time where I don't, it crashes down, my account really hurts. Okay? Do I agree with you? Yes, I agree with you. Not all the time it's going to give the bounces. So if it's not going to give the bounces all the time, how the fuck am I going to manage that situation? How am I going to manage that? Then let me tell you how you manage that. If you know 2,000 pip, we're going to start seeing the correction. And that's why I said 1 hour backtesting Saturday of what you see on the chart for 3 months. You know the range. Now, and you know the worst case range. So you know 2,000 pip, you're going to see that correction going up. Now, even if these layers didn't come into play straight away and they reverse, like you said to me, Mr. Gold, sometimes the layers, they also reverse. What happens when it goes back up? When it goes back up, guess what? Those layers come into play faster than that bloody thing that you got stuck in the top. But those who didn't even enter the layers, imagine they didn't even enter the layers because they realized once in a while even the layers don't give. So that's why, Mr. Gold, I didn't enter the layers. So those who didn't enter the layers, what do? They have that trade up there that's been stuck for 3-4 days, maybe a week, 2 weeks, and they're waiting for it to come back into play. And then finally it comes back into play, and guess what? They get out on break even and they're happy. Whew. Big sigh. Oh, wow, they're so happy. They're cracking the champagne bottle. They're over the moon. They're having a feast that they survived it.
C'est moi.
Had they had the layers in there, then those layers would have made them money earlier, recovered that position earlier, and then if you got out at break even on this trade, you would have made money on that run up. What stopped you from doing that? Let me tell you. your mindset and psychology. Because that trade here, you left it there. And look how you contradict yourself. Let me tell you how you contradict yourself. The whole reason you didn't cut this trade, why? When you were all the way down here, why didn't you cut the trade? Because you had hope in your gut that it's going to go up there. So if you know and you had that gut and the whole reason, because let me tell you something, definitely you had a feeling that it's going to go up there. That's why you didn't cut it, because otherwise it can completely blow your account and you're never going to cut it. Are you that stupid that you're going to just let it blow your account? So you have hope that it's going to go up there, yet you don't put anything in to enjoy that ride up. And it does go up there like you had hoped, but you didn't enjoy the ride up. So if you have hope that it's going to go up, then you knew it's going to go up there. Why the hell are you not putting trades in? Because your psychology is stopping you. And let me tell you the biggest screw up that you made, and that again stopped your psychology, is, and I gave you the easy option. The easy option is you leave that there, add layers in between, and then finally enjoy the ride up. That's the easy option. Why is that an easy option? Because psychologically you can still do that because you're not chopping anything. But the best move, which is too hard for you guys because you don't have the psychology for it, is cut that bastard up there. Cut it. If you are down there now and you're hoping for it to go up there and you've left it on there, you are better off cutting that and putting the same trade back in here. Even if it reversed further down. Because if it reversed further down, if this was still there, you have a chance of blowing that. If you've re-entered it down here, you can handle that. You've covered all that margin back. You've dropped that margin, you've cut that margin, and you have a fresh trade in there. Even if it's half the size of that. If you have a trade stuck there and you are down here and you're now waiting for it to go back up here to meet it back in, don't you think it's better to just chop that and enter the same trade here, exactly the same thing? All that means is psychologically you're going to see the blue earlier. You can milk in and out. You can enjoy the ride in and out and catch double that. So why is it that you don't cut the one on the top and put it back in from the bottom? You don't cut the one at the top to put it back in the bottom because you think you're losing money when you chop it on your account. Where you see the drawdown number where it says £5,000 reversing, £10,000 reversing. You rather see it reversing than cutting it because somehow you think cutting it means losing it, but seeing it reverse doesn't mean you're losing it. That's a fugazi. That's fake. Seeing that reversal minus, that is actually losing it. Seeing that trade at minus, you've already lost the money. The money is gone. There is no money there. So you need to reset your mind. When you see the drawdown, it's the same thing as cutting it. Exactly the same thing. Because if you can't withdraw the money because it's reversing, it's the same thing as you cut the money. It is there. Why is it? Why is it that the market shows us this reversal? They know the system. They know they created this system to do this to you. They know humans are creatures of attachment. We cannot detach ourselves from something that is ours, even if it's bad for us. We are greedy creatures. So now, that trade reversal, even though it's not yours, you still don't want to let go. But it's exactly the same thing. Chopping it and putting it back in there, there's absolutely no difference. The only difference is this is better. You get to see the blue before continuing to see the red and abusing your psychology. This is abuse. This is self-abuse. This is self-harm. Chopping it and putting it back from here is a breather. So learn to chop from the top, enter from the bottom. If you don't want to enter layers. If you don't, I said to you, you can just leave that in there, add layers, and it will receive itself back up for gold. If it's buys, And if you don't want to add the layers in because Mr. Gold, my account isn't big enough, I don't have the sizable account, then okay, don't add the layers, but chop that fuck up. Chop it from the top, put it from the bottom. Guarantee you you're going to get a breather sooner rather than later. But if you do what I do, and I know how my intradays roughly play out in this range. I'm just going to quickly bang in some intradays. They're not going to be accurate as my algorithm, but I can roughly size them up. I can size up a range. Okay. So now, these are rough intradays, rough gold turns. This is the kind of range that my algorithm will map. Now you see that reversal. Even though it didn't give immediate bounces on them, look, so from here, reversal, 1, 2, 3, 4, 5, 6, 7 intradays here. This one gave a bounce, this one gave a bounce, this one didn't, this one didn't, this one didn't. Because it did later, but initially it didn't. And this is the one that you guys panic at. Mr. Gold, but 3 of them just went crashing. Yeah, I got 30 pips there, 30 pips there, and 30 pips there. But what are these 30 pips when this bloody fucker up there is reversing 1,500 pips? Right? This is the 3 that scares you. But now look. This one gives it, this one gives it, this one gives it. And these that got stuck, they come into play. And don't take my word for it. Go into the channel. Go and scroll back 4 years. Every single buys that we got stuck in aggressive downhill like that, they went and got it. It went and done the number. Guaranteed fact. 100% it's gone and done it. Nobody. And if it hasn't done it, it'll be one of them, and it will go and do it. And I guarantee you. Somebody's left and come back. Bear with me. Bear with me, somebody just cut and come back in. So, guarantee you can scroll back. Every single one of our buy targets have been done. And if one hasn't been done, it's going to get done. Matter of time. But otherwise, every single one of them have been done. So these 3 that gets you scared, these 30 pips don't ignore. You got 30 pip, 30 pip, 30 pip. And this 3 that got you scared, look, it eventually went and done it. So your thing is, but this 3 adds so much to my drawdown, Mr. Gold, so my psychology doesn't allow it. If your psychology doesn't allow it because these 3 adds to your drawdown, that's why you have to chop the one from the top. If you had chopped the one from the top at 150 pips, or at 200 pips, or at 300 pips, if you've decided to top it on the second SL at 300 pips, you've taken it off, and you've now taken 30 pip, and now you got stuck here on this movement down because you added 3 layers. You added 1 layer here, 1 layer here, and 1 layer here. Because you chopped that one and you made 30 pip, 30 pip, 30 pip, this 3 reversing is you're okay to hold it because you chopped that one. And now they come into play. Can you see they come into play? But because you didn't chop this one, when these 3 also reverse, you're too scared to add anything here. While Mr. Gold and some of my experienced members are loving this ride up, you couldn't add anything here because this one shit your pants. And this one shit your pants because this one is the one that you didn't take free up to give you margin. So if you don't have the courage to believe in what I'm saying, or to believe your back testing that I'm telling you to do to see the maximum range, then chop the one from the top so you can handle this midway swing that scares you. And this is done deliberately. The market knows these are stop loss hunting. Let's take them out so they can't enjoy this ride back up. Because they know people who trade gold, they're going to eventually ride this back up. So if you want to be a long-term gold trader, you need to first and foremost find a way to build a large account, because then you can guarantee 100% success by only taking buys. I said to you, don't take my word for it. Zoom out. The proof is in the pudding, guys. Proof is in the pudding. And there's a reason why the best traders for gold only do buys. It's not just Mr. Gold. Every one of these big boy traders, big girl traders who trade gold successfully, not your willy-nilly social media traders. Professional traders will only add to their long positions. Their portfolio, the way you trade funds and big hedge funds, they are not like you and me retail traders, just buying and selling, buying and selling, buying and selling. No, they allocate amount of liquidity, money, into a part of the portfolio which belongs to gold. And when other assets and other things are not doing well, they release and they add to the portfolio of gold. The only time they are getting out of gold to put in somewhere else is when they have other areas that they want to invest. Gold is at a good price, they release some liquidity and put it somewhere else. But otherwise, they only add to positions of gold. From every dip, they only add. So if the market crashes in gold and it comes down, all they're doing is they've already built that portfolio up to a certain extent. That reversal, they're calculating over a period of 5 years. They're seeing that, okay, we've already netted X amount of liquidity. This reversal down, yes, the account's hurting, but not what we've already made. So we will add to it. They'll add positions to it for it to ride back up and build that portfolio. We need to do that in mini scale in our trading accounts as retail traders. And the way you do it in retail trading is by micro lotting, trading small, so effectively you have a massive portfolio. Treat that 1,000, 10,000, 5,000 pound account. If you have a 20,000 pound account, treat it like $1 billion fund. Trade 5p lots on those accounts. I have a few smaller accounts that I use to manage my, manage my household running, you know, like bills and food, etc. And we run small accounts for that, me and the missus. 30 grand, 40 grand, not my 200-300 grand accounts. My 20 to 30 grand accounts, the maximum lot size is 5 pence. Literally, it's 5 pence. Why? Because I know it can handle an 8,000 pip reversal, so that money's safe. I'm never going to lose the money. I'm never going to blow the account. So rather than leaving 30,000 pounds in a bank account, where the bank can screw your money anyway, your bank is only protected by 80,000. So rather than leaving it in the bank, I put it in my broker account and I only trade 5p lots. If the market crashes, the worst case situation, the Armageddon is going to be 8,000 pips. The once a quarter, if I get stuck in a swing, 4,000 pips. But my daily manipulation swings is 2,000 pips. These are the three daggers I have to survive. So if my 5p lot on my 30 grand account can survive these 3 daggers, I'm not blowing that account. So that account is safe. Now, worst case, I'll chop that 5p if I get stuck on the 8,000, 4,000 pip reversal, and I'll put it back in from the bottom, catch the ride up. And then I'll enjoy the ride up, I survive. What I also do is I have multiple other small accounts that eventually turn into bigger accounts. And the reason why, if you have one big account, like a 30 grand account, it's wise to split them up into 3 accounts. Because you see that 30 grand account that I said I'm never going to lose, the worst case situation on that account will be I can't trade it for a couple of weeks or maybe a month. Why can't I trade it for a couple of weeks to a couple of months? Because I'm stuck in that Armageddon and I have to wait patiently for it to go back up. So I can't trade it for my bread and butter. That's the worst case. So if I have another one of those accounts, that's why I said it's good to have a few accounts. Those accounts I only trade from reversal. So there's never an entry at the top. They only get traded. Sorry guys, bear with me. Someone's just come in. I'm going to have to... So, worst case, so what I do is those accounts that I have on the side, because the other one, worst case, is going to be stuck for a month. When you guys have that account stuck for a month, you don't want to be not trading. You don't want to look at a dead account like that. You force trades in it and you damage it, and then you can't afford to wait for it to free up. I just leave that account parked up and I go into another account and enter it from the reversal. And what a feeling. A fresh account that's just sitting there to trade from a reversal, put a trade in from the minute go is turns blue. What a feeling. Now, the minute that turns a bit blue, guess what happens to the other account that was parked up for a bit? I can do two things. I can either leave it there because I have faith it's going to go up and let that stay there while I run this one up. Or the minute I've run this one up and I'm seeing I've equalized the other one, I can just chop that trade. I can just chop that trade because I've equalized it on this account, bank whatever I need to bank on this one, and then my other account is free again, and this one I put back as backup again. If you don't have the luxury of having extra accounts, you split your existing account. You have a 10 grand account, split them into 2 grand, 2.5 grand, 2.5 grand, 3 grand, 4 grand. If you have a 20 grand account, again, split it. Split it into 2 to 3 accounts so you can trade from reversal. Some of you have 40, 50 grand accounts, and that's your only account. And then you have like a 500 or 1,000 pound account. Doesn't make no sense. If you have a 50 grand account, you need to split that into 25 grand, 25 grand. I'm telling you, it's such a breather. You can park an account up with your small trade, let it free up, and in the meantime, you have another account to enter from the reversal. When you're feeling shit and a trade is reversing on that account, the new account that you put in from the bottom, it gives you such a feeling that now suddenly your psychology is strong enough to handle the first account that's reversed. And if your psychology is strong enough to handle the first account that's reversed, the whole game changes completely. Now, okay, so now the second part I wanted to show you so I don't forget. Okay. Let me zoom in. Mr. Gold. Okay, so one of your things is, okay, I get it now, Mr. Gold. We always ask you, how do we know when it's going to turn? How do we know when it's going to turn? How do we know when it's going to turn? Okay, bounces are given on intradays and moving averages, but how do you know when it's going to turn? Two things. 2,000 pip is your maximum range on our day-to-day manipulation drops. That's the maximum. So you know between 1,500 to 2,000 pips, we are going to see that swing. And then you've got your once in a blue moon and your once in a lifetime Armageddon, 8,000 and 4,000. These are the big waves, biggest waves you're going to see, 8, 4, and 2. How do I know when to test the range of that movement about to happen? And we can also use this as a trade, like a signal for everyone here. And what we do is the turn of the EMA 5. When we see EMA 5 after a drop, and it can trick you, so I'm not going to look for an easy one, I'm going to look for a harder one. I'm going to look for this drop here. Because today is about raw psychology, so we want to look at raw. So this is 3,000 pips. Okay? Really, it went up from here, so it's not 3,000 less, but we're going to go worst case 3,000 pip. Now, every time, show you, zoom in a bit more. We are looking for not a turn like this, a gold turn like this where it's bent, not a turn like this, even though it's a gold turn, but a slight one. I'm looking for a sharp turn like this. Once I see a sharp turn like this, The candle after has to be a blue candle that locks this EMA 5's position, meaning it makes this EMA 5 position above this turn. Okay? So what I'm going to do, guys, bear with me. I'm going to delete some of this because I want a clean chart and delete these lines. So this is EMA 5. And this sharp turn of the EMA 5 is where I'm going to place this line. Whenever this sharp turn happens, okay, you don't even have to place a line. The point is, wherever you see a sharp turn like this, we are looking for a candle after. Most likely has to be a blue one because we need this part of EMA 5 to sit above this turn. And I need this candle to finish. So first, I'm seeing this little turn happening and I need this candle to finish to secure this turn. After that, the next candle usually gives us a 50 pip movement. Here it's given way more than that. It's given 400 pip movement. The reason why I say 50 pip is 50 pips is what we secure if we're just looking for quick signal. If we are looking for recovery of a trade that was stuck right at the top and we are looking for turn of the wave, you know, somebody's asking, how do we know when it's going to turn, when it's going to turn? This is the first trigger. Even though, look, it's a fake one, it doesn't matter if it's a fake one. Let me show you why. This is the trigger that we have to test. In that test, we can make 50 pips. And then what we do after we make 50 pips, we trail it. We've moved the stop. And everybody keeps asking this $1 million question. How do we catch the turn? Pay attention. I'm going to tell you how to catch the turn. You get this turn first and you wait for this candle to close. This candle close gives this confirmation that this is a sharp turn now. The next one is our entry candle. When we enter, the minute we secure 50 pip, you can either move the stop to break even or some of the profit 30 pip. The reason why I say 50 pips, 50 to 70 pips is the best trailing stop when you're trying to catch a big run. Because the gold will swing that 70 pips and take your stop out. Normally, within that, 30, 40 pips, very easy to stop you out. So securing 50 pips to 70 pips before you adjust to break even, it gives you a bit of that freedom. So what I do, because I want to catch the full turn, I'm not after 50 pips. For you guys, imagine you're trying to cover recovery. Then you can take that as a trade, 50 pips to recover some trade. Okay? But for me, I'm trying to catch the full turn. So for me to catch the full turn, what I do is on that candle close, I enter a trade. As soon as it goes into profit, I adjust the stop, leave it at break even. Even though it made 400 or 500 pips, I can adjust it, keep adjusting it, and then I get stopped out because look what's happening. It comes back down. When I get stopped out, I still made a couple of hundred pips here. Okay, but I didn't catch the full turn. No problem. I wait, go down. And now here, sharp turn again created, guys. And look, again, stitch up. Sharp turn again created. This is the following candle that gave the confirmation of the position. I enter on the next one. It reverses. Reverses, but look, goes back up. So now on this reversal, because it's a big reversal, 500 pips, big drop, 500 pips. Let me just check. Sorry, am I looking on the H1? Yeah, one candle. Yeah, one candle. So this is very unique situation, but one candle, 500 pips. I'm going to take my stop loss, 150 pips. Kalas, take stop loss taken. Remember, I'm catching the wave. I want to take the full turn, and you all wonder, how do you catch it? So remember, 150 pips, I'm going to take that. I'm going to take the stop loss. Why? I don't mind because I already on trying to catch the turn, because this is how you professionals, this is how we test the range. This is how we test the range. I made a couple of hundred pips here. I don't mind taking 150 pips stop loss here. I took it, and then again, another one is created. Candle, wait for it to close, confirm. I enter on this one now. I enter, goes back up, lovely. I'm banking pips, adjusting stop loss, take it to break even. Now I can handle this reversal because I entered here. This reversal, if I took this to break even, remember the minute I take it to break even, this reversal doesn't trigger my stop loss. So I've caught it now. I'm in the wave, guys. Now it goes back up. This stop loss, I now move to the next turn. Look, this is another sharp turn. I move it there. Now, gone back up. Again, I move this stop loss to this turn, this sharp turn. Gone back up. I move it to this one. Now I've secured this whole run. Look how much I've secured with the trailing stop. 900 pips. Now, again, I moved it here, gone back up, and then it reverses. As it reverses, my trailing stop, my stop was adjusted here. I lose here 300 pips. The stop loss activates. But I secured close to 900 pips. 300 pips out, 600 pips secured. Goes back down, created a sharp one again. Candle finish, next one enter, boom. Caught this movement up. I moved my stop loss to entry because I want to catch the whole wave. It got me out. Got me out. So again, I wait for the next sharp one. Sharp one again. I enter on this one. Reverses 150 pips stop loss. I take it. Take it. Again, same here. I enter. Again, 150 pips. I take it. I'm using up my 900. I keep doing that until, look, I rode the entire wave up. Absolute safely. What I've just given you is the golden ticket, guys. Practice it on the demo account. This is the true art of range management with safety. The turn of the EMA 5 will give me the entry, which gives the rocket. In that journey of giving the rocket, those market makers, those people who create the system, they give us fugazis, fake rockets. In the hope of me catching the whole wave, this is why people, right from the get-go, they wanted to catch this whole turn from here, the wave. They wanted from here to catch this movement up there. That ain't happening, my friend. They're gonna screw you over. So we test the range. How? I know it gives a rocket, but it gives a mini rocket. And therefore, I keep adjusting my stop to entry until I fall into this full rocket. And sometimes they don't even give me a mini rocket, like I showed you the other two. They just give me straight stop losses, 150 pips. I don't mind, because out of 20 here in this range, 20 turns, and look how good my eye is. I just looked at the screen and I can guess, and I'm going to count it now to see if I got it right. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19. Wow, what a guess. This is how used to I am in riding waves, that I can just visually see it. And I picked this data randomly. As you know, I freestyle all my sessions. I picked this randomly because I have faith in my system. So what I'm saying to you is, these turns give me minimum 50 pips as a signal. They give mini rockets of 200 to 300 pips. The purpose of these turns are not for signal. I use it to test the range to catch the wave. So even if I get a little bit of profit, I adjust it to break even. Adjust it to break even. Adjust it to break even. If it doesn't give me a little bit of profit and reverse it straight away, like the one I showed you earlier, I take my 150 pip stop loss. In this whole screen, out of all the stop losses and all the range, the money I make on the mini rockets is already covered my stop losses, as you have seen. I've just done it live with you guys. And then when you fall into the correct one, voila, Bob's your uncle. You are catching this entire move up. Currently on some of my personal accounts, I have trades running from here. Running from here because when I caught it from this turn here, I put my stop loss as I was adjusting, and what I just did there, I put my stop loss here. And even though I got all of this run up, I had to see all of that profit go back down here. But it still hasn't triggered that stop loss here. So therefore, it's done all of that and it's still going up. I've got trades from this here still. So that account now is fully safe. Now, if I do my normal trading every day, 50 pip, 1p, 1 lot, 1.5 lot, and I get stuck on 300 pip reversal, 200 pip reversal, I don't give a shit. Because this one here is in serious profit. So what you want to do is two things. Trade very, very small for the signals and wait for these big corrections down and then range in like I just taught you. Test the water in with those small trades, break even, in and out, break even, in and out, break even, in and out until you fall into the wave. And the minute you catch the wave, leave that trade in there. Leave that fucker in there. That is going to be your insurance policy for your day-to-day trading here. And when you do your day-to-day trading here, you can draw wages from this now. Because even when it's reversing, this is already multiplied this into your account into profit. This profit is constantly growing as the account is going up. Here, day-to-day, intraday, wherever you make or lose makes no difference because of this profit, and you can draw money. So, one of the things that I want to follow up from this session individually with you guys is I want to be able to find you guys an entry for the next wave. And I want you to find it and you to discuss it with me on Sunday. Mr. Gold, I took an entry on that sharp turn. I secured 50 pips, but when I took my break even to entry, the stop loss triggered in, so the trade's out. No problem. Well done for catching it, but trades out, made nothing, lost nothing. Mr. Gold, following day, I stuck another one in. This one, I managed to catch a 700 pip run. I caught 500 pip of it, adjusted my stop loss, but then it stopped out. I didn't catch the full wave. Don't worry, well done. This time you caught 500 pips. Another time, Mr. Gold, I've done another one. I tested another one. This one, I adjusted the stop. I left it out on break even right from outset. I didn't secure 500 pips. So next time when it came down, it didn't trigger my stop loss because I didn't want to take 500 pips because my stop loss is right in break even. So I allowed this big drop down without triggering my stop loss. And Mr. Gold, because I waited 4 or 5 days, I've caught the full run now. Now this trade is safe. Excellent. Secure up to 1,500 pips and then let the rest happen. So as you build appetite, you might find yourself, you've caught a whole run like this. You might have caught this whole run like this. I've done it, guys. This is the art of range management. This is the art of range management. And if you forget what I've just told you, you're going to message me Sunday and I'm going to give you something to again remember. Only if you forget. But otherwise, I'm sure you're not going to forget. But I've got you on this. I've also recorded this. I've recorded this so you don't forget this. And this is, is one of those things where I was thinking, how do I show this? Do I show it to these guys? Are they going to be able to do it properly? And then I thought to myself, most of the guys that are going to do this course, let me tell you who. The ones that see, psychology and mindset, I'm not going to spend £500 doing that. Let me not do it. I'm really happy they're not doing it because they're not going to be able to execute this. Those of you guys who need this are the ones who've been trading for a while already. You made money, so you know it works, but you lost money, so you're thinking, shit, how do I fix that? And then you made money again, so you know it worked, but then you lost money and you think, how do I fix that? And then you think, shit, what if I caught this entire move up? Then I would have been like always on the top. So I knew the ones that are going to join this course are the ones who need this. And that's why I gave this to you guys. And that is the art of range management. When you catch those turns. So let's pick another range again. So let me go and find another range. So zoom out. Because this was a nasty one. The one I just picked up there was a nasty one. So I want to try and catch. Okay, so let's catch this wave. Okay. Like I said, I'm going to randomly pick data. Let's catch this wave here. And again, zoom out. And let's see again, roughly how many that we've got here. I'd say visually, if my eyesight give me, I say about 24. I see 24 entries for catching the wave. Let's see. So let's catch it from the downtrend. So we got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, ooh, even more, 24, but now we're already going up. So yeah, nice again. So I know that when I identify a range, what I see in my screen 3 months worth, May, June, July, gives me about 20 to 25 turning points of EMA 5, entry points to try and catch the wave. So now let's live try and catch this wave, guys. So here, waited for that turn. Here's the first one I see. Here's the candle I waited for the close, and next one I entered. I entered on the next one, and 50 pip given, but stop activated on break even, couldn't catch any run. Went back down, and then here. So I didn't lose anything because I managed to go into profit first, adjusted stop, so no loss. But if somebody took break even at 50 pips, they made 50 pips. Then I see one here. Closed above, so when this candle closed, this EMA 5 closed above this turning, gave it a sharp turn. Entered on the next one. 120 pips given. If I took 100 pips, great, but if I'm waiting to catch the full wave, as it went down, that's break even, it would have triggered the stop loss here. Then the next one, I enter again here, so I lost nothing yet, but kept stopping out on break even. Next one here, that's the entry, entered here, reversed a little bit, went back up, so still within 150 pip, went back up into profit, came back down, stopped out on entry, made nothing, lost nothing. Here again, entered, this candle confirmed, entered on the next one, good amount of profit, 130 pips, went back down. If I had it on break even, made nothing, lost nothing. Same again here, entered, 180 pips, 200 pips. If I took it to break even, stopped out, made nothing, lost nothing. If I took it to 50 to 70 pips, like I told you, then I stop out at 57, I still made 70 pips. So because I said to you, use 50 to 70 pips on a run to adjust your stop, you would have made 50 to 70 pips on each of these runs. Then this one here, closed here, entered here, but I went straight down and triggered my 150 pip stop loss. This one here, entered on the next one, nice run. Gave me a nice run of 260 pips. If I secured 70, 80 pips, went back down and activated my stop, went back down. Here, entered on this one, 150 pips stop loss straight away. Here, entered on this one, entry here, went back up, captured over 200 pips. If I'm trying to catch the wave now, it would go back down and activate my stop on break even, no issue. Here again, enter, caught this one, catch it here, no break even, so I'm still catching it, adjusting my stop. I've caught a run, guys. I've caught a run of 500 pips. 500 pips, I can secure 200 of it, put a stop loss here, because I want to try and catch the full wave, activates my stop loss. So I lost 200 pips, but I made 200, so still okay. Went back down. Same again here. Guys, caught that whole run because that break-even stop loss is here. So I managed to catch that whole run. 400 pip. comes back down. If I keep it, this is why I say I don't catch the 50, 60 pips. I take it just to break even so I can handle this reversal. Now this goes down, it doesn't activate my stop because my entry's here. So now, that's it. I've caught the run. I have caught 700 pips, guys. Zoom out. Whoops, full. I've caught the full run. Because I've stayed on that break even, I've caught the full run. So I had to do 10 days of testing this ranging of how I showed you to catch the full run. Guys, it works. Do the next run on demo. Catch that wave. And you manage to catch that wave, then the next one you do it on your live account. You're going to invest 10 days. Guys, what the hell is wrong with you? Why can't we invest 10 days? Nothing wrong with it. It's the art of range management. Test the range for 10 days of work. That's what we do as traders. It's not easy money. People say easy money, easy money. No, this is the work we have to do. Test the range. In and out, in and out, in and out. Break even, break even, break even. Catch that wave and catch that run. The minute you've caught the run, don't be greedy and bank it. Don't be greedy and bank it. What did I say you're going to use it for? It's your insurance policy. You are going to keep that insurance policy for your day-to-day trading now. And now, every day, what we do here, day-to-day, stop loss, 300 pip, 400 pip reversal, those big shitty movement down, and you think, oh my God, what am I going to do? It's not going to do nothing to you because you know your insurance policy is down here on the way. The minute you think this is hurting too much, the minute you think this trade that you suddenly got stuck on is hurting too much, what do? Bank some of the profit from your insurance policy to cover that and get out of this one. You're free. And if you catch an insurance policy like Mr. Gold from here, then these little trades, my insurance policy is for life. My gold portfolio is for life. The market cannot hurt me anymore. Touch wood, it cannot hurt me anymore. So what I've given you right now today is the first journey into you becoming a full-time trader, meaning I'm teaching you how to build your insurance policy. You are going to start learning how to build an insurance policy on your small waves, catching these waves. And once you've been confidently catching these small waves, giving you the day-to-day insurance, then you are going to catch the big wave. And you will find yourself, this is why I'm excited. When I see movement down, I know it's going to go up. Look at last night. Movement down, I said to you guys, it's going to go back up, went back up. Mini waves. And guess what? Another little, if you don't want to catch the big waves, even mini waves, you can use this technique. Wait for this sharp turn to form, follow with candle, next one entry, pips given. If you do that over 4 days, you might get a couple of stop losses, but the money you make more than the stop loss because it can give you 400-500 pips, guys. Not 50 pip signal. If you catch that turn, it can give you 400-500 pips. Here, that sharp turn, this one closed above it, this one entry gave 250 pips. This one here gave again 300-400 pips. This one here, not a sharp one, sorry. This one here, sharp one, closed above here, lots of pips. Sharp one here, entry, let's see how much it gave. Okay, 60 pips. So even if you want to guarantee maximum success, as in like not guarantee, but a high hit rate, take 50 pips. But I've given you guys so many 50, 40 pip signals, even on level 1 and 2. You want to be now catching that. This is why you've got this mindset psychology course. I want to gear you for that 700 pip movement, 800 pip movement. Why? Because it gives you insurance. Then if you have a couple of day-to-day stop losses on the normal trades that we take, your psychology is not hurt because you're like, you know what, I made 900 pips, 800 pips. So you're already getting your day-to-day 50 pip, 40 pip from me and your level 1 and 2. With this turning thing, just do break even. Don't worry about making money. Just break even, adjust the stop, adjust the stop, adjust the stop. If you have to put 10 trades in and keep adjusting stop and make nothing, but lose nothing, and suddenly find yourself in the wave, voila, Bob's your uncle. Because you won't be suddenly find yourself in your wave. Guaranteed, you are going to eventually find yourself in the wave. Okay? So guys, I hope that was very, very useful for you guys. If you didn't find it useful, test what I told you, and then you'll thank me later on Sunday that I've given you what was missing. So I'm going to recap. Need a trading plan from yourself Monday to Friday, because I'm going to hold you accountable, because you're going to tell me every Sunday your entries for catching the wave, because I'm going to try and get every single one of you guys into a wave. So I'm not going to support you in entering the wave if I don't have a trading plan from you. So if you want my support to get into the wave, I want a trading plan from you. So number one, I want a trading plan from your Monday to Friday trading plan every Sunday. Put that work in. Number two, find someone in your family, whether it's your partner or your best friend, tell them to hold you accountable. Give them access to your trading account as an investor so they can see if you're over leveraged, if you're gambling, or if you're trading more than you said that you would. So give that to your partner, a trading account that they can view. Number three, share your entry for the wave every Sunday of which one you've entered, which one you've tested, and tell me what your stop loss is for that trade. And show me the range on a screenshot so I can see it. Okay? And then my commitment will be for you guys to see you guys into a wave. And if I can't get you into a long-term wave, at least you're going to catch a few short-term waves, and it's a matter of time where you're going to get into a long-term wave. Okay? So guys, well done for listening to me here today. Thank you so much. Drop me a message even right now after the course telling me if you are committed to give me a trading plan and if you're committed to catch a wave. Don't send me a message if you're not going to be committed, because if you say that, then I'm going to put your name down on a tracker that I can then hold you accountable and I can monitor you. Okay? So confirm back to me straight after this course if you are ready to be doing that, and then I can put my resources and energy into servicing that. Okay? Thank you so much, guys. That's a wrap for today. And I'll catch you guys on Sunday, and any questions you have, I'll take care of them for you on Sunday as well. And if you need a quick recap on any of this, drop me a private message and I will arrange a slot for the recording for you. Okay? Thanks, everyone. Take care and goodbye. I'm going to sign off now and I'll catch up with you guys Sunday. Thank you.